The past few days have been somewhat of a hit for Tesla investors, especially as Tesla's stock prices continue to go down the chart. In the midst of all these uncertainties, investors seek answers to the millions of questions on their minds, especially ones that give a sneak peek into Tesla's potential future.
Post 9, Dan Ives, Wedbush securities analyst, does cut his target to 310. He was at 350, but keeps the outperform rating. Dan, it's great to have you.
Great to
Thanks
be
for
here.
coming in. What about it made you say that?
I mean, if you looked up disaster in the dictionary, there'd be a video of last night's conference call. And I think the problem is that the street wanted to get details. Have the price cuts ended? Where's the gross margin outlook? What does demand ultimately look into 2024? And instead, it was really Musk put on his macroeconomist sort of hat. And that's not what the street wanted. I think it was lack of details. And ultimately, it was a somber note. Especially when it looks at Cybertruck and you look at the margin outlook, and I think the long-term thesis is still there, but with no rose-colored glasses, I mean, this was definitely what I'd call a...
Tesla stock recently dropped 15% in just 5 days, wiping out thousands of dollars in market value. This has kept investors worried, and some are starting to contemplate whether or not to sell their shares. But you may ask, why this drastic and dramatic decline? And what are the prospects for Tesla's future? In this video, we're going to explore some of the factors that have contributed to Tesla's stock slump. We will also examine how Tesla is trying to overcome these obstacles and maintain its leadership position in the fast-growing EV market. So without any further delay, let's get into it.
Tesla, I think, is certainly a very difficult one to trade. We've got to take into account Elon Musk and tweeting or Xing. But there is Cybertruck demand. They're a beneficiary of the Inflation Reduction Act. Additionally, they have EV credits, and we're getting towards the end of the year. And normally we think about items tax-wise. They have been focusing on getting more demand than they have been near-term profits. But as far as EV is concerned, and they're prioritizing really their pricing, and they've noticed some attention to detail to certain specific things, their data shows that the U.S. vehicle growth, they grew 23% year over year. Most competitors, even though that's down for them, it's still an increase 23% year over year. So we need to have some repricing and some recalibrations. But from a competitive perspective, anyone else in the EV space just doesn't have the same type of management and cost-efficient structure, because that's what they were centered around. Whereas others are doing shift focus-wise, they have got a low cost or low capital structure, and that's important. I think it's going to be a buying opportunity at this moment. So the trade that I structured with this one, different than the previous, is a cash secured put because of the volatility, but I would want to add it to my longer term portfolio for that reason.
Tesla continues to enjoy a strong demand for its EVs and is growing its revenues steadily despite cutting prices several times in this year. But the company's latest report is just a reminder that building EVs is a costly business. While factory upgrades drove Tesla's production costs higher, the EV maker also incurred large expenses on research and development, its AI projects, and the Cybertruck. But will this continue to affect Tesla's stock price, and what is the next line of action for Tesla shareholders? Let's find out. Hey guys, welcome back to Tesla Tomorrow. When Tesla started cutting prices, a lot of interesting things happened. Morgan Stanley analyst Adam Jonas, who recently made the case for Tesla as a tech giant, cut his price target from $400 to $380. Dan Ives cut his price target from $350 to $310, even while contemplating his long-term Tesla thesis and how it remains largely unchanged, but is now actually against some prominent roadblocks. Then Gene Munster of Deepwater Management noted that there were more misses than hits in Tesla's latest earnings report. Investors were cautious heading into Tesla's third quarter earnings because of a few specific points. The most significant point of concern for most investors and analysts is centered around the price cuts Tesla's been conducting, and the company's gross margin that has been falling as a result. But before we carry on, guys, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. One main point of concern for Tesla's recent earnings, and probably one of the reasons why Tesla's stock price has dropped so deeply, is centered around the Cybertruck, the brand new Tesla model that has investors and customers alike waiting years for production and deliveries to start. Tesla's Cybertruck made waves when it was unveiled back in 2019 with its futuristic, robust design, brilliant set of capabilities, and integration of cutting-edge technology, which all generated tremendous excitement among Tesla fans and investors. The vehicle's unveiling wasn't just a spectacle, it was a response to a growing demand for electric pickup trucks in the market. With its impressive specs and versatility, the Cybertruck aims to cater to a wide range of consumer needs, which is probably why Tesla is looking to get it to market as fast as possible. Coupled with Cybertruck news, Gary Black, managing partner of the Future Fund, has also given other possible reasons for the drop in Tesla's stock price. According to him, the 15% drop in the stock is due to two factors. First up, the price cuts, and then flagging long-term confidence. Black noted that this week, and afterwards, no one can deny that investors are very concerned about further price cuts since volumes are not really responding to price cuts already taken. Tesla's gross margins fell to 17.9% for this quarter, down from its 25.1% gross margins last year. And while Tesla's margins might resemble more of a short-term dip, the earnings call succeeded in shaking many investors' long-term confidence in the stock. According to Gary Black, Tesla's management failed most by mitigating the factors that drive long-term excitement. This was even more difficult since Musk urged tremendous caution about the Cybertruck, and didn't discuss greater autonomy, robotaxis, the $25,000 next-gen model, or even EV adoption. So what might be the story be for Tesla in the long run? Will the stock be able to bounce back and hit record highs again? Well, in our opinion, this is definitely not the end of the road for Tesla. The automaker has a lot of projects in the works, and while these projects might not have been mentioned by Elon Musk, it does not make them any more insignificant in Tesla's growth story. For instance, Tesla is the only company in the world working on a fully AI-based general driving solution. The automaker's FSD software is gradually reaching its peak stage, and it is anticipated that in a few years, the automaker might be fully autonomous. One of the major goals for Tesla is making cars fully autonomous, and the automaker is leveraging big data and AI to make that happen. Similarly, Tesla will take advantage of exponential technologies. The automaker plans to provide a new fast-charging system and a battery with a greater range than its competition. Its DC fast-charging systems already deliver up to 1 megawatts, and they employ a water-based coolant to ensure it's safe in delivering that power. The charging system will be used to power up Tesla's Cybertrucks, the consumer pickup truck that the automaker is planning. And there's also the Semi, and according to Tesla bull Dave Lee, the Tesla vehicle, well, the Semi, will be an asset for shipping companies. The Tesla investor noted that the only thing better than cutting costs on fuel is cutting the costs on paying a real person a real wage to actually drive something to a different location. And with the Tesla Semi, both can be conveniently fulfilled. So you see, there's a lot to be achieved here, and seasoned Tesla investors realize this. For instance, stronger bulls, including Cathie Wood, do not just adjust their outlook on Tesla stock. ARK is convinced that Tesla's major growth story will center around robotaxis, adding that the short-term fluctuations in the EV game won't really impact the success in that sector. ARK predicted in April that Tesla will be trading at $2,000 per share by 2027, an increase of multiples that is largely reliant on the robotaxi fleet and robotaxi margins. And even Gary Black maintained a $300 price target. And he said that the three most important Tesla value drivers are affordability through a $25,000 next-gen vehicle, the successful rollout of Cybertruck, and a massive EV education advertising campaign, all of which are gradually becoming reality for Tesla. But what's your Tesla valuation looking like? Let us know down below, and for more exciting updates on Tesla, go ahead and click on this next video on your screen. See you there!